Hello, members, super savers, and bond course fans. I hope you're healthy and well, and welcome back to our weekly bond update. Bond yields were down a fair bit this past week, but the silver lining is that there are still some good yielding checking and savings accounts, as well as CDs out there. So, with that in mind, here are the 3 topics that we'll be covering in today's video. 1. What are the top yielding checking, savings, and CD accounts that you've sent us recently? 2. Which treasuries rose the most and which ones fell this past week? And 3. What's on the upcoming treasury auction schedule? Plus, what are the highest yielding opportunities for new issue agencies, corporates, and brokered CDs right now? As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. What are the top yielding checking, savings, and CD accounts that you've sent us recently? For the top high yield checking account this month, we have super saver Daryl B to thank. He emailed us earlier this week to let us know that F&M Bank out of Northwest Ohio has a loyalty rewards checking account that earns 5.05% APY on up to $25,000 when conditions are met. Daryl's family has been doing business with this bank for decades. So, for those of you who live in Ohio, Indiana, and Michigan, you're in luck. This one is for you. And for the Super Savers, members, and Bond Course fans who don't live in Ohio, Indiana, or Michigan, the high-yield savings accounts and CDs that we'll be talking about after this one may be more suitable for you. F&M Bank, short for the Farmers and Merchants State Bank, is headquartered in Archbold, Ohio, and listed on the NASDAQ. So F&M Bank's loyalty rewards checking account allows you to earn up to 5.05% APY on balances up to $25,000. And if we scroll down, we can see that to earn this 5.05% APY in Tier 3, the requirements are receiving an e-statement and that all 3 of the qualifiers are met in the monthly statement cycle. Let's scroll down further to see what the 3 qualifiers are. 1. A minimum of 20 debit MasterCard point-of-sale transactions post and settle to the account. 2. A minimum of one $500 or greater direct deposit or ACH debit or credit must post and settle to the account. And 3. You must have a combined total of $25,000 or more in personal deposit accounts, primary account owner, based on the average daily balances and or loan relationships based on current principal balance. And some of the benefits of F&M Bank's loyalty rewards checking account include free online and mobile banking, nationwide ATM fee refunds up to $10 a month, and a low $5 monthly service charge that is waived if you meet the monthly qualifiers. So these points here that we just covered, as well as free online statements and easy overdraft protection. So pretty standard stuff in this instance. F&M Bank has been FDIC insured since 1934, as you can see here. So, if you are interested in the loyalty rewards checking account and you live in Ohio, Indiana, or Michigan, as I mentioned earlier, you can just click on Apply Now to start your application online. Or, if you have more questions, you can click on Contact Us. And this page will appear with all the different ways you can reach them. You can visit a branch in person, and you can find a branch location near you by clicking here. Or you can call them at this phone number. I've linked this page in the first pinned comment below this video, along with the links to the other financial institutions I'll be covering in this section of today's video. Now, for those of you who don't live in Ohio, Indiana, or Michigan, or who have less than $25,000 to stash away in a bank account, the top high-yield savings account on our radar for this month continues to be Axos Bank's Axos One Savings and Checking Bundle at 4.86%. This rate has stayed fairly stable over the past several months, but as usual, there are certain requirements that need to be met, as shown here. Another top contender on the list is Open Bank, whose high-yield savings account still stands at 4.75%. But unlike Axos, which you can open online from anywhere in the U.S., Open Bank is not available yet for residents of Connecticut, Delaware, Massachusetts, New Hampshire, New Jersey, New York, Pennsylvania, and Rhode Island. We've talked about both Axos Bank and Open Bank a fair bit in previous videos on this channel, so I've linked this latest one in the first pinned comment below if you want more detail. Many of the top CD rates that we talked about in that video are still valid at the time of this taping, including this 5% APY 18-month CD from Mountain America Credit Union, and this 5% APY 13-month CD from ClearPath Credit Union. And if credit unions are not your thing, then you may want to check out this special promotional 4.5% APY 14-month CD from Marcus that was just sent our way. The promotional term expires on May 28th, 2025, and there is a $500 minimum balance. All the financial institutions that we've shared with you today are either FDIC or NCUA insured. And as always, do remember that interest earned on checking, savings, and CD accounts is taxed at all levels, whereas interest earned on treasuries is exempt from state and local income taxes when held in a normal taxable brokerage account, which is a nice segue into the next section of today's video. Which treasuries rose the most and which ones fell this past week? As we so often do at the end of the week, let's grab our rates from the Treasury's Daily Treasury Par Yield Curve Rates page and compare Treasury yields from this past Friday versus the previous week. Here we have all the maturities that the Treasury issues at auction. Here's where yields stood this past Friday, and here's where yields stood at the end of the previous week. And here's the increase or decrease in rates over the past week. Increases in rates are shown in black, and decreases in rates are shown in red. Treasuries across nearly all maturities ended lower than the previous week, with some very significant drops on everything 2-year and longer. In fact, the 2-year and the 3-year fell below 4% just barely, but they do have a 3 handle. The last time they were at these levels was back in October 2024, and the 5-year fell the most, ending the week 23 basis points lower. Primarily driven by growing concerns about the U.S. economy and ongoing tariff uncertainty. Drop a comment below. How concerned are you about the U.S. economy? And do you think tariffs against Canada and Mexico will actually go into effect on March 4th? Or do you think they will be postponed once again? Now, let's take a look at Treasury yields from this past Friday versus the beginning of the year. This row shows where rates ended this past Friday. This row shows where rates were on January 2nd of this year. And this row shows the increase or decrease in rates in 2025 so far. Again, increases in rates are shown in black and decreases in rates are shown in red. The 2-month and 4-month are only very slightly higher than where they started the year. Just 2 basis points up for the 2-month and 1 basis point up for the 4-month. The 6-month is unchanged, and the 1.5-month or 6-week was just launched 2 weeks ago, so not much to say here. All the other maturities are down since the beginning of 2025, and not by just a few basis points. We still don't technically have an inverted yield curve yet. The 10-year still pays 25 basis points more than the 2-year. Last week, it was just 23 basis points. And the 30-year still pays 13 basis points more than the 1 month. But this difference has narrowed a lot over the past 2 months. As a point of reference, at the start of the year, the 30-year paid 34 basis points more than the 1 month. And at its peak, the 30-year paid about 55 basis points more than the 1 month. As our Diamond NestEgg regulars know, we've been watching these changes quite closely. And in our mind, at this point, if we get another round of bad inflation, unemployment, or other economic data, there is a real possibility that the yield curve could invert again as recession fears make a comeback. As customary, we will continue to stay on top of this and keep all of you informed here on our channel. You can find more details on these rates for any day of the week that the bond market is open on the Treasury's Daily Treasury Par Yield Curve Rates page, as I mentioned earlier. All sources are linked below in the first pinned comment. Do keep in mind that this overview gives you a general feeling for where rates currently stand along the maturity spectrum. The yields that you may get when you buy at a specific auction or from a specific broker, or when you sell, will likely differ a little bit from what's shown here. Now that we've covered Treasury yields from this past week, let's move on to the next section of today's video. What's on the upcoming Treasury auction schedule? Plus, what are the highest yielding opportunities for new issue agencies, corporates, and brokered CDs right now? Here we are at Treasury Direct's upcoming auctions page. If we scroll down, we can see that all the weekly T-bill auctions are happening as usual. There is also a 12-day CMB for those of you who like your spontaneous cash management bills. And because I know some of you do, this 12-day CMB is available for purchase from Fidelity and E-Trade at the moment. It isn't available on Schwab or Vanguard, as they normally do not offer CMBs at auction on their platform. So, other than that little bit of excitement, who says treasuries are boring? Other than that, it's pretty quiet on the auction front this week. Now, for those of you who may be interested in other types of bonds and CDs for a bit of a higher yield potentially. The highest yielding new issue agency bond on Fidelity's platform at the time of this taping is again from Federal Farm Credit Banks, this week at 5.74%, with a first call date in March 2026. Here's a CUSIP for those of you who may be interested. For corporate bonds, the list is exceptionally short this week, with the highest yielding one from National Rural Utilities Cooperative Finance Corporation at 5.75%, with a first call date in March 2030. Here's a CUSIP for those of you who may be interested. For brokered CDs, the highest yielding one is from Jonesboro State Bank at 4.6%, with a first call date in June 2025. So really not very attractive relative to the bank CDs and the checking and savings accounts that we just shared with you earlier in this video. As always, if you know of any bank CDs or checking and savings accounts with particularly attractive rates at the moment, then please do drop them below and let me and the community know. All right, members, super savers, and Bond Course fans, I hope you enjoyed this video and learned something new. And as always, if you want to learn more about bond investing, then check out this video here on our beginner and intermediate level bond courses. And if you're interested in learning more about real estate investment trusts, come join our member zone and check out our latest member videos on REIT investing. This one was just posted yesterday. I've also linked all the details on our bond courses and YouTube Super Saver membership below this video for your convenience. Good luck to everyone who's planning on picking up some bonds and or CDs this coming week. And see you again very soon with more brand new wealth building content for your financial journey.